On Tuesday, the Monetary Policy Committee kept all interest rates unchanged, prompting reactions from analysts. Now let's get some perspectives from the fixed income market as Ayodeji Oyini, fixed income dealer with Rand Merchant Bank, joins us from Lagos. Thank you, Ayo, for your time with us. Okay, if you can hear me, I just want your reaction to the decision of the Monetary Policy Committee to keep all rates unchanged.
Okay, thank you for having me. Like you said, the rates were left unchanged because of the current situation where we are. We've had inflation pick up to 18.3% for October, but because of the GDP outlook, everyone needs, it's not the right time to actually hike rate, and which was what led CBN to taking the call to just maintain it, because nothing has also changed before the last auction and done. But in terms of market reaction, the market sort of envisaged these and priced this in. Earlier in the week, we've seen sell-offs in the fixed income space, but we saw some recovery yesterday. So with yields in the bond space hovering around 15.30 to 16.10. And in the T-bill space as well, we have a discount rate between 14 and 200% in terms of yield, actually. And that in itself sort of creates stability. So we've not really seen so much in, because markets already priced in the expectation of retaining most of the key metrics at the MPC.
Now, there are concerns in the market based on what we know that some investors would want higher yields. And so some of the bond auctions that we had a few weeks ago, Treasury bills auctions, were undersubscribed for. Now that the interest rates still remain unchanged, do you think that it may remain the same in terms of appetite for the bonds and the Treasury bills?
Okay, in terms of higher yields, like you mentioned, okay, the investors will require higher rates for the bond, but I would say the T-bill is quite attractive at this point in time. So we have yields on the 1 year currently at 22%. I think that's right. I mean, quite a good level, but the major challenge has been the liquidity in the FX space. So if the FX market was liquid, we would have seen a lot of interest in the T-bills and bond space. So, and one thing we should also know is that the bond yields might be negative return at this point in time, looking at the current inflation. But in terms of inflation projection, that is going to slow down over time. So in terms of long term, you would still have real return. So 16%, 16.2 looks like an attractive level in the bond space, given the long-term average inflation expectation.
So talk to us about today's trading activities. Okay, I think Ayo is no more there. Thank you so much, Ayodeji Oyini, fixed income dealer with Rand Merchant Bank, giving us his perspectives as to how the markets reacted to the decision of the Monetary Policy Committee, keeping interest rates unchanged at the end of its two-day meeting yesterday. Sudan's annual inflation rate rose to 19.6% in October from 18.32% in September as the price of foodstuffs and transportation climbed. According to the Central Statistics Office, prices have soared in Sudan since South Sudan seceded in 2011, taking with it 3/4 of the country's oil output, the main source of foreign currency used to support the Sudanese pound and pay for food and other imports. The government had kept the pound's official rate at 6.4 to the dollar since August of 2015, but it trades at 17.8 on the black market. The dollar shortage and ballooning black market for hard currency has made imports more expensive, raising prices in general. And Morocco's annual consumer price inflation eased to 1.6% in October from 2.3% in September, owing to a slowing down in food prices. According to the High Planning Authority in the country, annual food inflation eased to 2.2% from 4% in the previous month, while non-food price inflation rose slightly to 1.2% in the 12 months to October from an annual 1.1% in September. Education costs rose 2.8%, but communications were 0.3% less expensive. On a month-on-month basis, the consumer price index eased to 0.3% in October, down from 0.7% in September, as food price inflation fell to 0.8% from 1.1%. Mauritian Bank Group SBM Holdings will acquire full ownership of Kenya's Fidelity Bank, a small lender, in a deal valued at 100 million shillings. SBM said in a filing with the Mauritian boss that it would inject 1.45 billion shillings of fresh capital into Fidelity once the deal gets all the required regulatory approval. The Kenyan Central Bank said the deal was expected to be completed by the end of this year. The central bank said Fidelity, which started operating as a commercial bank 20 years ago, has 14 branches in Kenya and is ranked 31 out of 41 Kenyan lenders by market share with 0.39%. SBM Group, which operates one of the Indian Ocean Islands nation's leading commercial banks, SBM Bank, had assets of $4.2 billion as of September. It also operates in India and Madagascar. Okay, let's take you to Egypt just before we wrap up the program. Currency drop hits Egypt's medicine supplies, angering the public. The central bank freed the pound's exchange rate to help spur investments and ease a dollar crunch. The shortages include some cancer treatments as well as basic items like insulin, tetanus shots and contraceptive pills. Egypt floated its currency on November 3, abandoning a peg of 8.8 pounds to the US dollar and allowing the currency to roughly halve in value to about 17.5 on Tuesday. The float helped the cash-strapped government clinch a $12 billion IMF loan. It hopes will unlock investment and revive growth that has been hampered by political uncertainty since the 2011 uprising that toppled President Hosni Mubarak. And that brings us to the end of today's edition of Business Incorporated. Many thanks for watching. We hope to see you same time tomorrow. I am Bolaji Akinwale.